Cool. So first thing first, you have to understand that is 97% of traders, 90% of the traders, this is the thing. Trading works for everybody because if you can get results, you know what you're doing. Whether that's from your own analysis or whether that's from a product. Everything works. You know what doesn't work? It's just that you don't have a trading plan, right? You don't have a game plan coming into the market. And one thing I want you guys to understand is this: the best hustlers have the best exit strategies. That's my first point. The best hustlers have the best exit strategies. So poverty has no plan. So if you get into the market without a plan, that's called gambling, right? See how long that's gonna get you. I'm speaking from personal experience, right? Another perspective change really fast. You guys are in the world of investing. You guys being in the world of investing, what that simply means is this. What that simply means is this. Investing is not for you to get rich overnight. Investing is for you to eat, get your daily bread day by day. That's how you become a long-term investor, right? I hope this is making sense. Let's get it. So perspective change, because the reason I say that, a lot of you guys coming from the 95%, you guys been exchanging time for money. So you guys look at investment, extremely different. I've been a full-time investor going on 3 years next month. Different world, different perspective change. So before I do go into that, I broke this down in a couple pieces. I'm gonna be going over candlesticks, proper risk management, and all that good stuff, right? So you guys can screenshot this too. So you're gonna have 3 support systems. When you do start. So the first support system, if you guys unaware, if you guys do not know, is Go Live. You guys are gonna have access to 6 and 7 figure educators, right? The second support system is a group chat with hundreds of students to ask questions, right? And then the third support system you guys are gonna have throughout your journey is the Zoom calls that's happening every single day, right? So that's the 3 support systems. So if you guys have a question, you want to first tend to those 3 things first, right? Because I say that to say because, all of my questions got answered when I showed up. Shout out to you guys for showing up today. My next point, I'm gonna be going through this really fast. So first step, if you new, you want to make sure that you attend the Forex Basics and the English Academy and take notes. So check this out. I'm gonna be going over candlesticks first. Right? So you guys, we're going over candlesticks first. So my first question is this: when you meet someone new, how do you decide, what they are like? You learn their history. You ask people about them and you try to decipher, what they have done in the past in hopes of understanding them better in the future. So why do you do this? Basically to make the assumption that they will do the same thing that they have done in the past in the future, right? So the markets are no different. When the market is on a runaway uptrend, traders look to older charts to see where the crucial zones are on the chart. This is also where we see history repeat itself over and over and over again, right? That's dope. That makes sense. So going into this first, so when you talk about candlesticks, before I get into the risk management and trading plan, you got to understand this basics. So candlesticks is basically a popular chart that displays the opening price, the closing price, and the high price and the low price for the markets during a given time period. Each candlestick clearly represents the important market activity that is given at a specific time. So how it works in an uptrend, and I'm not going to be going over details of charts or anything, but how it works with a candlestick, basic candlestick opening, it'll open up. What it would do is it'll open up, it'll push up, it'll push down, and then it'll come back and close. Same thing in the downtrend of market. It'll open up, right? It'll pull back, right? It'll drop down, then it'll close. Really simple, right? So when it comes to you identifying, your support and your resistance zones, and this goes for, if you guys using Gold Cup or the harmonic scanner or, a regular chart, all of this is the same, right? So I put this together. So basically support and resistance, support is the floor, resistance is a ceiling. That's what we call it. And you guys can see it on here. Support is the green, resistance is the red, right? Check this out. Zones are zones by one word. So zones by one word, zones. So basically, number one, zones are areas, not a price level. right? So zones are spots on the chart where price reverse repeatedly. The price came there and it reversed repeatedly. That's what zones are. Zones may be extreme height highs or lows on the chart, right? So zones are where traders find trading opportunities to enter into the market, right? So when you guys are using these specific things to trade, now you guys can be more aware of, what it actually means, right? So support and resistance zones rarely need to be modified, right? Once you do make them, they rarely needs to be modified. Line charts help you find your zones very easily, right? So it's better to identify your zones on a 1 hour time frame. It's better to identify your zones on a 1 hour time frame. Okay, cool. So characteristics of a zone. Characteristics of a zone. If you take a look at any chart for any currency, you will find historical price levels, also known as zones. Okay, yeah, somebody said it. Can I go back? Okay, cool. 1 second. Okay, cool. There you go. Let me know when you're good. Drop a 1 in the chat box when you're good. Okay, cool. Perfect. So I think you put a 1. There you go. All right, perfect. Let's get it. Okay, cool. Characteristics of a zone. If you take a look at any chart, for any currency pair, you will find historical price levels, also known as zones, right? So what you will notice is that the price has a tendency to reverse at the same price repeatedly, right? This is a distinguishing trait of a zone, right? And you may use this. You may use this characteristic to define and discover zones on your currency charts, right? It's simple, very simplistic, guys. Like I'm giving y'all what I learned in 3 years in this little small session. So this is stuff that's definitely needed for you to understand and know, right? So trade confirmations, a couple things. So trade confirmations. So traders do not take trades based on price reaching a zone. A trader uses several tools to decide when to take a trade. However, a trader will not take a trade unless price has broken and closed above a zone. This is the first step for a trader. The next step is to confirm that that candle has touched that zone once it broke out. This confirms that that zone is now a new support or resistance. Look to my right, guys. Look to my right. Right here, this zone, resistance. It broke above it. And then so this is a resistance. It broke above it, the break right here. And then it retested right there. So you guys can screenshot this or write this down if you guys taking notes. I say it's better to screenshot it so you guys can have this as a reference in the future for you all. So you guys can have a phenomenal week, right? If this is making sense so far, if you guys getting value, drop some 333s in the chat box, right? Let me know that y'all with me. Drop some 333s in the chat box if y'all with me and you guys getting value from this. Okay, cool, dope. Let's get it. Okay. Sheesh. Okay, cool. So my next point, the line chart is your friend. So when it comes to you identifying your zones, and again, you want to become a great trader, get very good at identifying support and resistance. That's it. That's all. And the line chart is your friend. The line chart actually helps you do that. If you guys can see this visual representation, and the best time frame to do it is on a 1 hour or the 4 hour time frame. So if you guys are taking notes, you guys can jot that down. Very simplistic, guys. All right. We're going to the next one. So check this out. Your confirmation checklist. So when you are trading, whether that's on a product, whether that's by yourself, you got to have a confirmation checklist, right? And I will say this, guys, this is very important when it comes to you understanding and knowing, right? Because if you got to treat this like you already earned 6 or 7 figures. Because if you treat it like a hobby, it's necessarily not gonna, you gonna get the results you want to get. So your confirmation checklist, number 1. you want to check the trend on these time frames. You want to identify the trend. Number two, you want to identify support and resistance. Number three, identify market structure. Number four, long wicks, consolidation, trend lines, breakout, recess, all the simple stuff, right? My next point, we almost done. We about to get into the risk management. We about to get into that. So if you guys don't know, you guys can screenshot this. I gave you guys a representation of market structure, you know, on an uptrend, and it gives you, you know, your higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Yeah, very simple. You guys can screenshot that. So this is a cool. This representation of a downtrend. You know, you have your lower lows, lower highs, lower lows, lower highs. Very simplistic, very simple, right? Very simple, right? Now, cool, perfect. So I also put this together. So if you are into Forex, I'm not talking about HFX. I'm not talking about HFX. We got an HFX call going on tonight, right, at 10 p.m. Eastern Standard Time. So who to watch on IML, on IMTV? So number one, you guys can watch Joshua Walls for the Forex Basics. For events, you guys can watch Christopher Derrick. I personally learned how to trade from him. He's an excellent, phenomenal trader, right? I honestly really learned how to trade from that man. He trades very simplistic. His perspective is, you know, amazing. And I would recommend him to any and everybody, right? I never heard of Swag Academy. I never heard of that. Number three, Forex Events, Kim Torres. For my individuals that really want to really learn how to trade too, Kimberly Torres. She's an amazing trader. I've been trading with Kim for the past 3 years, going on 3 years. I have never lost a trade trading with Kim. I can honestly say I have never lost one trade trading with Kim Torres. Kim Torres will get you paid, and she's about her business, and she knows exactly what she's doing with Forex. Kim Torres, don't play, right? If you trade with Kim Torres, if you follow Kim Torres, she will not let you down. I can promise you that. She's an amazing trader. She's a woman at that, and she breaks everything down very simple, very simplistic, right? Yeah, that's a fact. And she will guide you in the right direction. So she is an amazing trader. She trades US 30. So outside of her doing US 30, she still have her own personal lives as well too, that you guys can plug into. So make sure you guys don't sleep on her. If you guys want to learn Forex, Christopher Derrick, watch him on YouTube, watch him on Go Live. He is amazing. Right. And those are the two top traders that I really do recommend to individuals, you know, when you actually really want to learn how to trade. Right. You want to get paid. Kim Torres is going to teach you, and she's going to get you paid every day. Don't sleep on her. Right. Cool. So let's get into the trading plan and risk management. I'm going to be going over a couple things, but don't forget, like I told you guys, you know, the ones that's really paying attention, again, make sure that you all tag me. Because again, I'm gonna be, you know, funding somebody's account today. You know, if I check your notes out, and you know, it's up to par for real, right? So the reason why Forex traders fail, number one, FOMO. It's called the fear of missing out. They have FOMO, the fear of missing out. And what that basically means is FOMO is they would see somebody up in profits, and then they'd be thinking in their head, well, look, can I still hop into that trade? And then they'll go chase a trade. They go chase a trade, and then the market end up reversing, and then you'll blow your whole account. How do I know that? I did that when I first started out. Everything I'm talking about, I'm speaking from personal experience. The reason why I became a great trader, or, you know, the reason why I know a lot of things is because I made a lot of mistakes my first year trading, right? And the best way I learned was from messing up, right? My mentor told me don't over leverage. I over leveraged. I was playing $100 like it was demo money. Right, and I just didn't learn my lesson, right? Because I was so greedy. I had a worker's mindset trying to invest, and I lost a lot of money. The reason I lost a lot of money because I wasn't listening. So I'm telling y'all, listen, don't chase trades. Number two, the greed effect. What's the greed effect? You know, you'll make money on one trade, and then you'll get greedy and over leverage your account and drop a standard on a $100 account and blow your whole account. Right? That's called the greed effect, right? So don't get greedy. If you get greedy, the market will humble you. It has no emotions. You have emotions, the market is emotionless. So if you don't humble yourself, it's gonna humble you. That's a fact. Number three, they hope. When they trade, they hope. They hope the trade gonna go in their way. And because they hope, nah, you can't hope. You gotta know. And you hope. If you hoping in a forex market or trading, that means that you have ignorance. Ignorance is not knowing. Ignorance caused by you not studying. The only way for you to change that hope to knowing, to having confidence, is by studying and really understanding what you really got into. Right? I want y'all to really understand this is a market that can help you become financially free. You got to treat it as so. Is if you don't treat it as so, you're gonna like not really get to where you want to get to. Number three, excitement. You can't be excited. The same way that you can't be excited. You can't put feelings into trading. You can't put feelings towards money, period. Right? So if it's a skill set, investing, you can't have any emotions towards trading, right? No excitement, no emotion. You just gotta like let it do what it do. Another one, lack of discipline. Lack of discipline. Lack of discipline basically means not discipline. Don't have a trading plan. Poverty has no plan, all over the place. And not lacking discipline basically, lacking discipline. Like, they not really consistent. That's the biggest thing. Another one, not entering the stop loss. Family, my biggest thing that I learned was you need a stop loss, right? Reason I'm gonna say that is because the best hustlers have the best exit strategies. That's a fact. Again, I need you guys to really listen. You need a stop loss, and your stop loss always should be about 20 to 30 pips trading Forex. Hold on 1 second. You always need a stop loss, and your stop loss should always be about 20 to 30 pips. Do not ever enter a trade without a stop loss. Like, do not do that, because if you don't do that, you're thinking like the 97%, guys. You got to treat this like, it's investing for real. So have a stop loss to respect your balance. Not using a stop loss saying that, I don't really respect what's on my account. And another thing, lack of capital. Lack of capital. And the reason I say lack of capital is, a lot of people get started in this and they want to start trading accounts with $20, $10, $100. No, that's cool and all. You can grow that, but again, if you have money, don't be afraid to invest. If you can put capital in your account, put capital in your account, because you'll really see what the fruits of your labor. But if you have a small account, you get desperate. People with small accounts, they get desperate in trading because they have small accounts like $50, $10. They over leverage and they blow their account and they find themselves in the cycle doing the same thing. So I'm saying is, if you have capital, invest, because I want you guys to really think about this and think about this long term. You don't ever let Forex or trading slip from your mind. The reason being is, a lot of people start Forex with the perspective of putting $100 in their account, $200. If you really have the ability to put like thousands of dollars in your account, like 500 to 1,000, 2,000, 5,000, 10,000, when you get to that point, life is gonna start looking a little bit different from you. So I want you guys to think about this long term. When you really have real capital in your account, like you're going to get to the point where you're making, $300 a day easily, $500 a day easily, $1,000 a day easily. It can't happen. That promise can't happen. But you just got to be patient and wait on it. For real, for real. Another thing, unrealistic targets and goals. Cool. Can you guys still hear me okay? Drop some tools in the chat box if you guys can hear me okay. Okay, cool. Another thing, unrealistic targets and goals. So a person like me, I can start a $100 account and grow that to $1,000 in 2 days or a day, because I've been doing this for 3 years. I know how to do that stuff. That's a fact. So having unrealistic targets and goals in trading is another reason why people fail in Forex trading. They get started, they put $50 in the account, say, hey, I want to grow this to $2,000 in a week. That's possible, but at the same time, you got to be honest with yourself. How long have you been trading, and how knowledgeable are you when it comes to the market? Because when you know certain things, that can happen. And another thing, you guys are going on Instagram, look at another person's results and like, I want to go do the same thing. That's possible, but at the same time, why Forex traders fail is because they don't have unrealistic goals, right? Another thing, lack of knowledge. Like, and I can't stress on this enough, And again, the only reason why you see individuals that's confident in trading, confident in the business or in general is because they knowledgeable about something that you don't know, right? So your ability to have success in this market is going to be your ability to actually have gratitude and patience and the skill set. How knowledgeable are you? You know, are you seeking information, right? You know, you got different type of individuals. You know, me specifically, I'm gonna just be transparent. When I was up, you know, learning this skill set, I never compare myself to nobody else. You know, I will always found myself seeking wisdom, seeking knowledge, right? Making an effort to research these traders on YouTube, you know, go live. I would literally go in a go live session, go watch all the traders recorded videos, right? That was me because I was seeking knowledge. I'm aware of, you know, you need the knowledge, and what you don't know, the information is out there. You just got to seek. But if you expecting it to come to your hand, it's not just going to fall in your lap. All right, you have to go seek to get the knowledge. And when you get the knowledge, this thing, it says this. You're supposed to live life in seasons, not cycles. So if you're trading and living life in a cycle every week, the same thing happening, but you're not changing, you're choosing. And because you're not seeking wisdom to fix that issue, you're gonna repeat the same thing every single day until something changes, right? The moment you seek knowledge, the thing that you didn't know can change instantly, right? This is the thing. Time doesn't decipher your wealth. It doesn't. It's knowledge. So if you seek the knowledge, that's what changes, you know, your financial trajectory. If this making sense, drop some 333s in the chat box, right? That's the biggest thing that I personally learned. Time does not dictate your ability to actually really dictate your wealth. It's not time. It's not time. It's wisdom. It's literally wisdom. Because if you get the wisdom, you stop the cycles. If you get the wisdom, the knowledge, you get the cycles. I mean, you stop the cycles. That's a fact. It's not time. It doesn't take. The reason I say that is because you have 25-year-old multimillionaires and you have people that's 85 years old that's still struggling. It's not time. It's wisdom. It's about if you're seeking the wisdom. That's a fact. My next point. That was deep. That was deep. Another thing, proper risk management. Let's talk about proper risk management. So again, like I talked about trading again, guys, I need you guys to think with this perspective. You know, if you guys put more capital in your account and you guys are disciplined, it's about proper risk management. It's about getting your daily bread. So for every $100, you know, if you're learning a skill set, right, you want to use the 0.01. Reason being is utilizing a 20 to 30 pip stop loss is risking about $2 to $3. I know that's not a lot of money starting out, but again, you know, if you really want to learn the skill set, this is what I'll tell you guys to do. Have about at least have about at least two accounts. Have an account with Forex on your live account when you're trading by yourself, and then have another account where you actually following your trading plan. How long when you following your trading plan, and how long when you just trading by yourself, right? So you can get those best of both worlds experiences, right? So yeah. Another thing, so for every 50 pips using the 0.01, catching 50 pips, that'll equivalent to $5 because that's 10 cents per pip. Catching 50 pips using the 0.10, that's $50. Catching 50 pips using a standard, that's about $500, right? So the only thing that changes is your lot sizes. So the pips stay the same. The only thing that changes is the lot sizes. And family, one of the biggest paradigm shifts that I basically had within the past couple of weeks of my experience trading is this. Honestly, I can honestly really tell y'all, you guys only need about 20 to 50 pips a day. That's it. You really don't need 100. You don't need 200. You don't need none of that. You honestly really only need 20 to 50 pips a day. Honestly, really 20 to 30. The reason I say that is because, you know, when these heavy hitters, when investors get into the market, you can easily catch about 20 to 30 pips or 20 to 50 pips a day easily. So you want to think with that perspective. You see, it's the individuals that been exchanging time for money that think they need it all in one day. It's not that, right? Because the thing is this. The Forex market was designed for the wealthy to multiply their money. So, you know, again, using a standard, catching 20 to 30 pips, that's about $200 to $300, right? So just think about if you had a $5,000 trading account or a $10,000 trading account and using the standard, right? You're catching about 20 to 50 pips. That's about $200 to $500 a day, very easily. So think with that perspective. That's why I say less is more. Less is more. But when you coming from the perspective where you're tight on money, you don't really have income like that, you know, catching 50 pips using 0.01, $5, you're going to be impatient because you're going to be greedy to actually make money. So that's why I'm saying when you have a larger account, you know, and, you know, let's just say you have $1,000 account and you're using a 0.10, right? That's $1 per pip catching, you know, 50 pips. That's $50. See, doing that, it'll put things in perspective for you guys. So you guys literally know what to do. It's just that you guys need a different perspective when you approach the markets, right? I hope that makes sense to y'all. Another thing, let's get it. So you guys can screenshot this as well too. You guys can screenshot this. So this is a lot size sheet as well too. Make sure you keep this handy, put it in front of your face. And again, it breaks down everything from 0.01 from a 0.10 to a standard. And again, a lot of individuals coming from the 95%, they stuck on what? The micros and the minis. The micros and the mini. But if you got capital, you can put a couple G's in your account. Now you can play around with the standards, and now you can see the real money, right? When you get to the point where you can play around with standards and you have real capital, you know, you're going to really experience the fruits of your labor with, you know, trading and with really real investing. But when you don't really have a lot of capital, you coming from, you know, putting $200, $100 in your account, not a problem at all. You got to really start in the mini and the micros, in the micro. Right? That's the perspective. So I want you guys to really think big and think outside of the box and think like that. That's why I said about 20 to 50 pips a day, not a problem at all. Whether that's coming from your own analysis or from a product. Another one you guys can screenshot is this. I actually got this from one of my personal mentors, Akil Bay. This is a trading plan. It says by week, but this is by day. So screenshot this. It says by week, but this is really by day. It says by week, but you can change that week to day. And it tells you if your account is at, you know, that specific balance, it's going to tell you what lot size to use. And write this down. The goal is to catch 30 pips a day if you're using this trading plan. So this is a trading plan. You're looking to catch 30 pips a day. And every time your balance hits one of those, every time your personal balance, you know, hits one of these, you know, 300, 600, 400, you're going to use that specific lot size catching 30 pips. I got this from Akil Bay, right? I got this from Akil Bay. He's developed, you know, over 10 seven-figure earners and over 20 to 30 six-figure traders, all traders, right? And this is the thing too. So when you guys are looking to catch 30 pips, again, if you have the elite package, you have access to product and services. If you guys are using a harmonic scanner or trading with Kimberly Torres or trading on any Go Live educator or using any product, you're only looking to catch 30 pips a day. I don't care if that's coming from a product or that's coming from your own analysis, but you're looking to catch 30 pips a day. It's going to take the lot size right here, because if you don't follow this, guess what you'll be doing every day? Living life in a cycle instead of a season, right? If this makes sense, drop some 777s in the chat box. Drop some 777s in the chat box because you need a trading plan. If you don't give yourself a plan, poverty has no plan at all. You will get into the market and and again, be like everybody else. You will be like everybody else that trades. That say trading don't work. But it does work. It's just that your mindset not working it because you don't have a plan. You gotta have structure to what you're doing, right? Principles protect your peace. Another thing, you guys can screenshot this as well too. This is another lot size sheet as well too, so you guys can know and understand if you guys are doing Forex. You have your micro, mini, and standard. You guys can screenshot this as well too. Want to screenshot this? It tells you 20, 30, 40, 60 pips. You guys don't even need to look at 60 to 80 to 100 pips. We're not looking at that. We're looking at what? 20 to 50 pips. 20 to 50 pips, and that's it. It gives us the lot size. It tells us how much income we're going to earn and when we catch the pips and everything. So that's that. So that's cool. That's that. So the last thing that I want to break down before we actually do come to an end is this. I want you guys to write this down. And this is the biggest thing. If you guys can take this and run with it, I gave this to my students as well too. So if you guys can take this and run with it, I guarantee you guys are going to actually, you know, really be able to last long term when it comes to investing, right? 1 second. 1 second. I just wrote this down. Eight. Okay. Here we go. Check this out. I got a US 30 compound plan, but at the same time, yeah, if you need that, just hit me up on Telegram personally. I'll send you a screenshot of that. I'll send you a picture of that. Dang, I just actually wrote this down. Sheesh. Hold on, guys. Hold on. This call is recorded too, so if you need it, I will drop it in the group chat as well too, if you need it to go back and watch it. Okay, cool. Check this out. My last thing I want to give you all is this, and write this down, make it on your home screen. But this is again, write this down. Principles protect your peace. Principles protect your peace, and understand this: proper preparation prevents poor performances. I need you guys to think with a perspective like you already have $5,000 in your trading account. Think with the perspective like you already have $10,000 in your trading account. I'm gonna give you guys, check this out. So principles protect your peace. So number one, these are your rules before you do take a trade, whether that's from a product, whether that's from your live personal analysis. These are principles that you want to follow. Number one is this: you need to take one trade setup a day. Write that down. Take one trade setup a day. One trade setup a day. One. Number two, one trade placed on your live balance a day. One trade placed on your live balance a day. One. Because when I watch these six-figure traders on Go Live, they don't place 100 trades on a live account. That's disrespecting it. They place one trade a day on a live balance. Every professional trader. Because you gotta be smart. You gotta respect your income. Number two, place one trade on your live balance today. One. Number three, the goal is to catch 20 to 50 pips. The goal is to look to catch 20 to 50 pips. That's it. That's all. You shouldn't be on the charts all day. After 1 p.m., your name Bob. Should nobody be on the charts? Why your name Bob? Bob the builder. You're gonna be a builder. After 1 p.m. Should nobody be on the charts after 1 p.m.? Your name should be Bob. I tell my org that, right? Your name should be Bob. It's time to build. It's time to impact. For real. So look, the goal is to catch 20 to 50 pips a day. That's all you need. Number four, enter all trades with a stop loss and take profit. Enter all of your positions with a stop loss and take profit. Reason being is because the best hustlers have the best exit strategy. If you trade and you don't have an exit strategy, before you put that trade in, you're not listening. You're not really following principles. You're going to be like everybody else. Enter all trades with take profits and stop loss. Your stop loss should always be about 20 to 30 pips every time. That's it. Number five, take trades from your own analysis or take trades from a product. If you have this is the thing. I'm gonna show y'all how to work what you pay for. See, you pay $300 to get access to the academy. See, it works because every time you look, Swipe Coin went 15-1 from the 1st to the 16th. Swipe Coin went 15-1. Imagine you taking every trade from Swipe Trades. What would your ROI look like on your account right now? Look at Gold Cup. Every time you look at Gold Cup, they're always winning. Look at the harmonic scanner. The harmonic scanner been hitting all week. I did a training yesterday. See, if you were to take one trade a day from a product and just plug in, a return on your investments on your account would be completely different. But you slowing yourself down because you want to do everything yourself, but you're not even confident in your own trading. Come on. Like, it works. You just got to fix your mindset for it to work. Right? So take trades from your own analysis if you're confident or from a product. If you're paying for it, leverage what you already have access to catch 20 to 50 pips. So with all that being said, guys, that's pretty much everything. I didn't want to be long at all, but I did want to be informative, want to be shown, and bring some value to you all today. This recording will be dropped in the group chat in about 20 minutes. I highly recommend you all. Can you say the second biggest takeaway? The second biggest takeaway was one trade placed on your live balance a day. And the reason I said it is because if you have $1,000 in your account, do one trade a day because you are looking to get your daily bread and not looking to do this all day, every day. right? If you're on the charts all day, nothing's wrong with that. But at the same time, guys, you didn't get started in investing to make that your job. This is not, don't treat trading like a 9 to 5, right? It's meant for you to live your life and you to have your income working for you. So with all that being said, if you got some value from the call, guys, let's drop some 333s in the chat box. Again, make sure you guys tag me on Instagram. I will be, again, picking somebody who have the best notes that tag me and who's been paying attention. And again, tonight at 10 p.m. Eastern Standard Time, 7 p.m. PST time, there's going to be an HFX call going on. So make sure that you guys plug into that. Today is Tuesday. Everybody on this call should be able to get results and get paid by the end of the week. Like really, like for real. Like if you're not having withdrawals, like plug in and listen, because again, the people that is seeing results showing up like myself, right? Don't let a chairman trade more than you and outwork you, right? Don't do that. So with all that being said, I love you guys. Thank y'all for y'all time and enjoy the rest of y'all day. Let's get it.